All right, just wanted to make sure that my headphones are on. AirPods sometimes hit or miss. Good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Monday, new week, August 22nd, 2022. Thank you so much for taking the time out of your day to join me this morning, every morning, 9 a.m. Eastern Standard Time. Let's go ahead and get started. The Dow is down 353 points, NASDAQ down about 200 points, S&P down about one and a quarter, 4178. Russell 2000 is 1935. And happy Monday, Patron Boy. Crude oil down 1.77%, was slightly green this morning, 88.82 a barrel. You know how I feel about oil. We don't have to go there. 10-year yields right below 3%. That's big resistance at 2998, 108.40. The real reason why markets are down is the dollar, 108.40. I'm going to delve into a little bit about the dollar today. The VIX 2317, up about 12%. Still, remember, we had about 33 for a while and the throes of the bear market. Now we're kind of around 23. That's not exactly high fear, but obviously being up 12% is. Gasoline futures down 2%, 2.4, $2.94 a gallon. Gold futures down about 1%. 1743 an ounce. Silver 1872. Bitcoin futures are down about 0.47%, 21,130. Ethereum futures 1561. Remember, we were just at 2,000 last weekend? Down about 8% on futures. Let's take a look at the euro dollar. Now we're back to parity. One exactly. 30 down 35 pips. Dollar yen 137.24, up 33 pips, and that's on fire. And copper futures down about 1% this morning. A lot to go over. Christopher's asking about Palantir. Let's go ahead and just answer that real quick, and then I will go over some of the macro today. Palantir is down about pre-market. Obviously, all the high betas. AMC's down today. I know they have this special ape dividend that's coming out. Bed Bath & Beyond is down. GME is down. So let's keep an eye on Palantir. And then we're going to go over a couple of things. If you guys remember, I said I don't want to buy this rally just yet. And I'm not quite there yet. But again, we're not just going to get a green shoot to the upside on everything, guys. You're not going to get it just a straight shot to all-time highs. It takes time. You're going to get some pullbacks. And finally, we're getting some kind of a meaningful pullback. If you're looking for Palantir, let's go ahead and start with investing. If you're like me, you own shares, I'm looking around $7.47 to buy. So about $1 from current levels. If we're looking to trade it this morning, well, you have to kind of stick with the short side here because look at this. 747 is your support, so that would be a good target. Let's see if we can break below $8. If we can break below $8, I would definitely want to short down to around $7.49, 750, like I just talked about. Let's go ahead and get started with S&P futures. S&P futures, if you guys remember we had this orange trend line telling us exactly how we were going, and we rejected a couple times, and we finally broke out. So a lot of people always talk about, that trend line that we have on the daily. You could see it right near the, if we can bring up SPX, it'll be a little easier. You can see this trend line here on SPX, that rejection. If you guys want to go back in time, you could see that we had a very similar downtrend and we broke above it. So having trend lines doesn't exactly mean it's impossible to break, but again, it is technical analysis. It's right there with the 200-day. This is expected. The only thing is that it's low volume. So again, before we run out and buy puts and buy short positions, we have to understand that we need to buy something that we could sell immediately or as quick as we can for profit because we're traders. Investors, right now, you're just waiting. As an investor, I'm waiting for around 4,095, 3,900 to start buying. That'll get us right back to the 100-day moving average. That's where I'm looking for to start really putting some money to work. I didn't want to go ahead and buy this rally either. Again, I'm not against the rally. I'm all for it. I'm still an investor. But at the end of the day, I don't want to buy when prices are going up. I want to buy when prices are going down. The good news is that we still have the dollar cost averaging with Bitcoin, Ethereum, and other cryptos and SPY-G. So again, we have definitely taken advantage of this rally and, of course, the bear market. But let's go back to S&P futures. We shorted QQQ last week, and those premiums were very dog slow, especially on an OPEX day. We think we took it for around, I want to say 20 some odd percent. It got to 40, but it was very slow, and I didn't want to hold any risk over the weekend. But yes, sometimes even puts can run slow. So we need to be very cognizant, be very careful of what we're trading, especially in a low volume environment. So we could just go ahead and draw this trend line again, and you could draw it there. We'll go ahead and extend it to the right to make sure it's nice and even. And you could see that we got close to that rejection line. The good news is that on the 1 hour chart, or actually on the daily, you could see that we do have that kind of megaphone extension here. And it's been pretty solid other than the break that we had in later July. But again, it's been kind of steady within that range. Obviously, the longer the time frame, the more it expands, and so has the market. So we're looking at the daily. Here's your key level here, guys. How about 41.71? That's your 20-day moving average. So again, you're about 9 points away from that. We talked about that 20-day DMA as kind of a indicator of short-term price action. So again, I'm looking to short, as the question from Hussein says. Are we looking to buy puts today? Well, again, I want to see if we break that 20-day moving average. I am leaning towards more puts as we have more central bank talk from Fed Chair Powell. He will be at Jackson Hole, I believe, Thursday and Friday. But in terms of economic data, there's just not tons to go by. Not a lot of earnings. You got Nvidia on Wednesday, but that's about it. Really, what you're looking for here, right here, is that 20-day moving average around 41.70 on S&P futures. If we go to the 1 hour chart, that really links up to previous resistance that we finally broke out of about a couple of weeks ago. So again, all we are doing here, if we do break below 41.70, we'll probably just retest the breakout that we had from about 2 Wednesdays ago. Does that mean the world is ending? No. It just means that we get retesting. Now, if we start bouncing from these levels here, this first, one of the second breakout, let's say it, this would be your, okay, we'll call it third. You have one, you have two, you have three. And if you even want to go here, that's not a breakout, but 1, 2, 3, the third breakout candle, basically a real main breakout candle. If we just retest that and retest this trend line and bounce, that's where you really have to start looking at buying, because that's where an indicative of a bull market is a retest of previous breakout and then bounces to go higher. And you can flip that where you have a breakdown, a retest of the breakdown, and goes down further. That just gives us more of an indication that we're on the right spot. So again, S&P futures, I'm looking for 41.70. If we do break, I want to see if we could target 41.16. In terms of futures, not a ton of edge, but again, you can slowly, incrementally move your stop as you go along. So again, my futures guys, take a look at 41.70. If we break, I want to target right around 41.16, 4100. If we break below that, we'll just move our stops as we go. I like futures a little more than trading SPY, Hussein, just for the simple fact that we don't have time decay against our contracts, and they're always liquid. Can you talk about the benefits of trading options with high volume, and what do you look for in usual options activities? This is of life of Omid. So in regards to high volume, again, we're going to try to treat trading just like any other business, guys. We want to buy something wholesale and then sell it at retail. So that's profit, right? Profit margin. But we want to buy something that can move. So I'm going to give you this quick analogy. If you buy let's say a Rolls Royce Phantom, and a brand new one, you drive it out the lot at this or whatever Rolls Ghost or whatever, you bought it for $250,000, and you're happy you're driving it. The resale value drops like a rock the second you drive out of the parking lot. And a lot of people think it's really because it's used. Used cars have been selling for higher prices. I sold my Lexus that I had that was a lease, and I sold it to Carvana. And I got extra for it. I got profit because they needed it. At that particular moment, Lexuses were flying off the shelves. And that was a 2018 car. It wasn't, brand new or anything. But Carvana knew that if they could just get this vehicle, they already had buyers lining up to pay even more than what they paid me. How do we turn that into trading? Well, keep in mind that it is easier to trade or to sell a Corolla used because they're flipping quicker than it is a used Rolls Royce. Just for the simple fact that price and demand. Not a lot of demand for Rolls Royce, especially new ones, but a ton of demand for used Corollas. College students, kids, people that are just want to go from A to B. I actually like Toyota Corollas. They're great cars. So people perceive the value. Some perceive the value based on price. Some perceive the value on underlying intrinsic value. How do we put that into options? Well, we want to buy something that we could sell. If there's a lot of volume, that means tighter spreads, meaning the difference between the bid and ask. Right when you buy your option or a stock, you're buying at the ask and then you sell at the bid. Have you noticed the ask is always higher than the bid? Sometimes it's a little wacky, but for the most part, ask is always higher than the bid. So again, you're buying something that you know you can flip. I know that we can always sell Apple options always. Tesla options are always in demand. Qs, SPY. If you start doing these penny stocks or very unliquid names, for example, let's say General Electric, big company, right? Mega cap company. But when it comes to options, they don't move. So again, there's not a lot of demand for those options. So we'll kind of treat that as a high-end luxury vehicle where it's still a good company. For example, I don't think General Electric is worth investing personally. That's why I don't own it. But again, it still has value. But in the options world, we perceive a value a little different. We want volume to be higher because we want people that are in demand for our contracts. We are renting these contracts. We're not going to own them. We're not going to exercise them. Just give it to me for a week or a couple of weeks, and I'll sell it to you at a higher price, and I'll make profit. And we want options that are in demand. That's why volume is so key. Now, in terms of unusual options activity, you can go to scan under Options Hacker on TD Ameritrade, Thinkorswim platform. This is not on the phone, unfortunately. We also have was it bar chart that has unusual option activity and different flow algos. Flow algo, cheddar flow, all those guys, unusual whales, they do this too. So they have their own like computer system that just searches. But you could do this yourself at relatively no cost. You go to 10,000 minimum, which is a pretty good round number. You press scan, and then it'll come out. Obviously, nothing's going to come out now since the market is not open, and these are futures trades, so we'll just ignore that. But I hope that answers that question, man. Thoughts on Chainlink and crypto as investments long term? I have not read about Chainlink, but when it comes to crypto, my main two are Ethereum and Bitcoin. To me, those are the Pepsi and the Coca-Cola of crypto world. Sure, one may do better than the other, but PepsiCo and Coca-Cola company or corporation, they do pretty well by themselves too. So let's go ahead and move on to the dollar. The dollar here, I went ahead and posted this on the blog and on Twitter. Let's go to the max. And again, you could see this is multi-decades, about 2 decades worth of data. And you can see this nice trend line. And we're getting closer, guys. Once it gets to 110, that's where it gets really serious. We may get that leg down and start retesting some lower levels, 3,900, 3,800 or so. We'll see. The good news is that it's not one for one dollar and S&P, kind of integration or relativity. So again, remember, we had the dollar go higher earlier this year, or that just last couple of weeks, and the S&P has gone higher. But again, you could see as the dollar is creeping to resistance, you can see these assets or risk assets are coming down. It's very simple. Look at the commodities: gasoline, crude oil, gold, and silver. This is why commodities are going down, guys. It's really because of the power of the dollar. And I've heard so many people say that we're going to have high inflation and the dollar's going to be weak. But look at the dollar index in comparison to other world markets: England, Germany, Russia, China, whoever. We are just destroying them when it comes to our economic activity. Is the United States strong enough to even handle a global recession, which is kind of looking like where we are, or a global slowdown, I'd say to say the least? The dollar is telling us that the US markets are still in demand. The problem is that when you have a higher dollar, that's how assets are priced. So again, if you have a higher dollar and your currency is worth more, you can buy more goods and services. You can buy more stock. Stock value goes cheaper. Not always one for one, DXY and S&P, but it'll at least give you some more of the background. So again, the dollar is going to be super important to watch as we're getting a little lower here on futures. If we go ahead and go to a 4-hour chart, you could see that 109.29 is our current resistance, right around 110. This trend line has been holding. We broke out of this trend line here. I'll go ahead and move that down, and we'll see if we get a double top on the dollar index or we finally break out, and then we'll probably get some more downside action on equities. Let's go to 10-year yields. Again, that head and shoulder, we're retesting that shoulder level here, right around 31.12. 30 is a big level. We have a gap to fill to the downside. More than likely, we'll fill that this week. Usually does. But for the most part, yields are telling us the story that treasuries are being sold. That again, it's more of a liquidity event with low volume. So again, you're getting bond sell-off with equity, with stocks being sold off too, and commodities as well. This is a good old-fashioned liquidity chase where we want cash dollars. Let's go to the volatility index. Not exactly full fear, but we finally gapped up above this trend line. So now what? Remember we had this trend line here on the 4-hour chart, or you can go on the daily if you want. The daily is fine too. We do have a downside gap to fill here, right around 21.27. If we do fill that, obviously you'll see the stock market go higher. So again, we may get some intermediate changes during the week. But for the most part, I wouldn't be surprised if we end the week red, especially with this low volume stuff. So, like I said to the actual blog, I said, guys, just be tactical. No need to go crazy this week. Again, volume is still low. Really, till post Labor Day is when everything is kind of back into rhythm, where we start looking at the midterm elections, where we start looking at GDP numbers. We start looking at the Fed again. Are they going to? How much are they going to raise next month in September? We didn't have a Fed meeting in August, so kind of the August month has been a nice little vacation. The bulls have taken over the past couple of weeks. Let's see if the bears take over and at least get us back down to maybe 4,100 or maybe 4,000. I highly doubt that. I think 4,100 seems to be the number where we might settle for the end of the week. If we bounce, that's fine. We'll play it as is. But again, you have to lean here, at least on technical side, to the downside, which is totally okay. It doesn't mean, hey, we're going to go back to 3,600. It just means, hey, buyers are going to pull back a little bit here and take some profits. And that's the nature of the beast. Every day is a new day in the market. And we'll finish up with crude oil. And again, the drill with crude oil with me. I still think we're going to get to around 85. I'm not putting a position in energy stocks at this very moment. I sold my Chevron for around 19% or so. Nice trade, not too terrible. But again, once we start getting to around 85, that's where I want to start looking at buying it up to more energy stocks for the portfolio. But again, let's get to 85 first. And we've been kind of just chopping around the last couple of days. You could see since last Tuesday, really between 91 and around 87, 86. But yet we just haven't had much movement. Just consolidation. Last time we had a consolidation was about a couple of weeks ago. We jumped higher to 94 and then we came back down. So really no edge here in terms of crude oil. I guess if you want to take a look at a possible head and shoulders, I don't see it. So again, right now, I'm leaning more to testing 85. That's our support level. And of course, we'll expect at least to tap that and then possibly bounce. But it really is all on the dollar. So King Dollar running the show. Keep that in mind. That's something to look at. Real quick, September 1st, last day for Masterclass lifetime access to signals. Just a heads up, if you were going to sign up for Masterclass, make sure to message Kevin or message us at GAR Capital. Another big piece of information. Next week we do have non-farm payroll report, and we also have Labor Day coming, so we'll get a nice holiday off. And with that being said, again, guys, the volume, super important. No need to rush anything today. I wouldn't expect really more than 4 trades this week, maybe 3 for our team. It's just, I don't see the volume just going that bananas one way or another. Sure, futures are down, they're selling it, but for the most part, I expect a lot of just choppy, slowly to the downside. We're not going to get that much volatility. I hope so. If you like these videos, guys, make sure to hit that like button if you enjoy them. Share it with a friend if you like them, and make sure to hit that subscribe button. Appreciate you guys as always. We'll catch you guys tomorrow for the morning note. Cheers.